Hey folks, it's Vic Noble here with a weekly trade example for you for the week ending January the 15th of 2010. This is a trade that it's a typical trade that we show actually in our live connect service and in the coach's corner and all that, but it's just a really nice little setup. And what's happened? Actually, this is the Australia US dollar, and it's we've had this negative divergence. You see where the price is going higher and the MACD's going lower. We've had this going on for a while, and there's been a lot of really good divergence trades within this on intraday basis. If you look at it too, though, what was interesting the other day is if you go to the 4-hour chart, what happened is we came back up and retested. See this? Look at these highs in here and here, over here and here. We're retesting it. Now, what we do when we see this is we're looking for patterns. Is there a reason for us to get short here? Now, you could say, well, you know what? We've actually got some negative divergence showing up on the 4-hour chart. Okay? And we've had a few of these along the way. And so, but rather than just start selling it, we wait for some qualifying criterion, which haven't quite been met here. But what did happen is as it retested this price level here, I want to show you what happened on the 15-minute chart. The price was going higher. Look at the MACD though. Look down here at the MACD. See what it was doing? It's going down. So now this is a trade that we watch to see if it qualifies for us. We have certain conditions that we want to see. And as price unfolded here, I'll just move it ahead here more quickly. As price unfolded, it qualified for us. And what we do then is look to sell it when it comes back up. And actually, we had quite a few people get short right up in here at 93.17. This trade actually only had about a 20 pip risk in it. Now, don't forget, on the higher time frames, we're showing some real negativity there. And look what's happened since then. It's just had this nice big fat drop. Okay, so from 93.17, this is actually current price action right now on Friday. From 93.17, we're down like 100 pips down on this trade. However, I want you to realize that this trade was actually, this is a very good one to be watching for these kind of patterns and these possibilities. Like this kind of stuff, you know, we point this stuff all out in the live connect room so people can see it like in real time unfolding. Now, whether you make a trade or not, that's up to you. We don't recommend making trades or not recommend trades. That's your call. We don't do that. What we do is we point them out to you so you can learn, so you can become independent at doing these things. And boy, there's been some really, really nice success stories just doing this one strategy alone. You don't have to do a lot of anything, okay? And but again, it was set up by what was happening on the higher time frame charts. This MACD divergence here actually has qualified, and this could end up being could be the start of a big move down. We just don't know yet. But I mean, that's trading for you. It is speculation. However, when you get all these patterns setting up and giving you this bias like this, they can be very good trades. And this one was a pretty easy trade. Lots of people got that one. So anyway, I just want to give you a little idea of how we examine things and the importance that I've talked about so much of watching support resistance levels. What's happening when price gets to those levels? How do we know if we should make a trade or not? And all that kind of thing. And this is what we look for. We look for tradable patterns and things that we recognize as possibilities. And then it's a matter of obviously impeccable risk control, risk management, and proper reward to risk ratios and all that kind of thing. Okay, so there you go. That's for the week ending January the 15th, 2010. Have a great weekend. We'll talk to you next week.